Taking a look at some of our market movers this morning, Rivian raising its production forecast for the year, upping it by 2,000 vehicles. The electric vehicle maker also ending its exclusivity deal with Amazon, opening its vans for other delivery opportunities. Staying in the EV maker lane, Lucid is lowering its 2023 production guidance. The company expects to produce between 8,000 and 8,500 cars. That's this year, down from about 10,000 was the previous target. This comes after the car maker misses its third quarter estimates. Lucid isn't the only EV maker struggling. Tesla and GM both reported slow EV spending in the last quarter. Okay, so a lot to unpack here, but really kind of rounding out the EV landscape. There was something else that Lucid also had announced in their most recent executive addition, bringing in a chief operating officer. So perhaps this one of the first big announcements under that realm and under the new tenure that's set to begin as well for Mark Winterhoff. But all this considered, you think about where Lucid, where Rivian, and the early production figures that we've seen thus far. I mean, I've seen a caravan of Rivians coming through New York once before as they're really trying to sell into some of the major cities, bring more adoption into their ecosystem, just as all of the EV players are. And at the same time, all of them adopting the North American charging standard. We just saw that from Lucid as well. I think that was announced this week, to make sure that it's easier and that people have more comfortability when they do get an EV, that they're going to have the ability to charge it wherever they go as well.
Yeah, but I think this all points back to the fact about what's going on right now within the EV space. It is very interesting to see what Rivian is doing in terms of upping their guidance, comparing that to what we heard from Lucid this week. Also, like you pointed out, what we've heard from GM, Ford, even Tesla lowering their prices once again to help boost demand. But I think that all just kind of goes back to the fact that EVs, at least from a mass market perspective, are not affordable. We talk about the fact that we need that lower priced EV. Clearly, it's probably not likely from a name like Rivian, given the current prices of their vehicles. But we talk about what's needed really to boost EV demand. Obviously, a massive shortfall when it comes to infrastructure. One of the other reasons, or one of the other massive, I guess, barriers here in terms of that widespread adoption. But Rivian specifically, it's a stock that's been under tremendous amount of pressure over the last couple of months, or last 3 months. I think the stock's off just about 30%. We've talked about a lot of the production issues that the company has had in the past. We know supply chain issues have been a huge problem here for the company. Also just some production specific problems from their plant located in Illinois. So the fact that Rivian obviously raising its target, a bit of good news here. We're seeing that reaction play out in the stock today with gains of just about 1.5%. But I think just overall going forward, when you talk about the opportunity, the growth opportunity for many of these companies, for many of the bigger players within this space, it all comes down to demand and what's necessary to boost that demand in the long run.
Yeah, and the other major issue for a lot of these companies that are trying to sell new vehicles is going to be the used vehicle market. As more EVs get traded in, that's where, sure, a CarMax, a Carvana might be able to be a beneficiary, but at the same time, people are going to be looking for it at a lower price point, and that's when they get into that used car conversation versus purchasing brand new.
Yeah, and of course, the higher rate environment, obviously another challenge here for many of these names.